Hey there, everyone. Hopefully, you had a great weekend. Just want to send across your weekly market update for the week of February 2nd through the 6th of February. So, let's jump straight into it. So, macro headlines, what this means for Houston. So, inventory continues to kind of normalize for the January pattern. You know, it's a slight uptick, but nothing aggressive that we've seen like in previous years. So, year over year inventory kind of grows nationally, but it is still under 10% from what we've seen in the past, well below last year's spring's peak of 30% plus. So inventory is a little bit lower than it has been in the past couple of years, but it is kind of something that we're watching on a weekly basis. For Houston, this supports what we're seeing kind of locally. More options out there in the market, but not an oversupply. So we're not seeing, excess amount of listings on the market. So this is something we're telling our sellers thinking about going active right now, or they're thinking, should we go wait until like the peak spring market, later in the following months. So we, expect, the inventory to grow between February and March of this year. So it kind of reinforces the advantage of coming on early and getting more eyes on your property and potentially, securing that buyer that you wouldn't have when the competition is a little bit higher later in the spring period. So when it comes to pricing behavior, what we're seeing here for the new listings, so new listings nationally are running slightly higher than it was this time last year, but historically this is low. So as you can see here, new listings coming on the market, we had a great peak, at the beginning of 2026, and now it's dropping down a little bit. We're actually slightly 1.4% lower. This is last week's data here, so we're slightly lower than we were this time last year from the end week of January coming to the February. So just want to say that we are a little bit higher than we were last year at the beginning, and now we're coming back a little bit lower for those new listings hitting the market. So it's interesting to see. We'll keep an eye on this week over week, but roughly 1/3 of homes are seeing a little bit more price reductions, maybe due to the fact of there's more inventory in the market than there have been in the past. Which is normal. It's kind of healthy to see that, but we're not kind of driving any sort of panic that most sellers are reducing their price, but it is normal to see that on a healthy market. And then when it comes to buyer activity for pending listings, so nationally sellers do still outnumber buyers roughly 47%, the widest gap we've seen over a decade. This is why buyers feel a little bit more confident negotiating, kind of taking their time and still being a little bit more selective of which home they want to choose. The rate stability is helping buyers move forward, even without major rate drops. So what we're seeing here is we did see a little bit of a peak at the beginning of January. A lot more, new year, new me, new home buyers coming in, trying to find themselves that home, and then it's just dropping a little bit. So it is interesting to see the last week of January to the last week of January in 2026, there is a 0.4% drop than we did see last year in 2025. And then when it comes to like migration and Texas trends, so Texas is still a great state to migrate to, and we're seeing some migration happen within the state. So, it has slowed a little bit nationally. We did see a big peak during the COVID times for a lot of people moving to Texas from other states. People are just trying to stay a little bit closer to home, whether it be for their work commute or, just trying to get a little bit more of their different lifestyle than they have in other states. But like I mentioned before, Texas remains a major beneficiary of in-state movement, not just from out-of-state relocation. So, Austin continues to pull from Houston, Dallas, San Antonio, reinforcing Texas internal kind of demand loop. And we are seeing people move from other cities in Texas to Houston as well. Like I mentioned before, Houston remains attractive due to job diversity, relative affordability, and housing variety. So we are seeing, a lot of corporate workers moving to Houston. A lot of the oil and gas still moves here to Houston. We got big companies that, this is their base for their company. So it's interesting to see kind of the inner loop movement for Houston, Dallas, and San Antonio. And then quick snapshot of HER. So I was showing you a couple of graphs before, but another thing that I found interesting was the showings, the closings, and the listing views. So listing views, the one that I really was interested in. So back in 2025, we saw at the beginning of the year a great amount of views on HAR for people looking at on the mobile device or desktop device. And this is something that we track weekly for our specific listings, and we share that information with our sellers. But it's very interesting to see that pretty much 50% drop off from the views from last year to this year. And this is the week number right here, so the week of the year. So very interesting to kind of take a look at. And then closings, they are slightly down from this time last year. 3% lower. Not a huge change, but it is something to take into consideration. And then same thing for the showings, but we did see a big pickup at the beginning of 2026, and now it's dropping off again. So a 14% change the last week of January to the last week of January 2026. So 14% difference there. So interesting to see that there's a lot of drop-offs in this graphs provided by HAR. And last two slides. So the big headlines this week for the possible new leadership role. So Jerome Powell, he's the chair of the Federal Reserve, the central bank of the United States. So President Trump picked Kevin Warsh, I think how you pronounce it, as a replacement for Jerome Powell. So obviously, in the past, Kevin Warsh, I think that's how you pronounce his name, is viewed as more market-friendly and historically less aggressive on rate hikes. So he's in more favor of dropping the rate and then increasing the rate. So it will have a difference on the housing market. Markets are watching this possibility of Kevin replacing Jerome Powell. So it could signal a more rate-friendly Fed long-term. But obviously, not only does President Trump pick him, but it has to get approved by Congress. So any new Fed chair must be nominated by the president and then confirmed by the U.S. Senate, which is part of Congress. So even though Trump picked him, it isn't a done deal as of yet. And the last thing I want to talk about for this week is going to be the rates and economy. So nothing really much has changed from this time to last week. So purchase mortgage applications are running meaningfully higher than this time last year. Even with a small week pullback last week, rates are still in that low sixes, below where many forecasts kind of expected them to average this year. But mortgage rates, for the 30-year fix, it sits around about that 6.21, up from 6.05 2 weeks ago, and then roughly 0.7% lower than this time last year. So buyer power is changing a little bit. We are seeing a little bit more consistency on the rates. So that's something that those kind of buyers who are looking to get that mortgage are taking a close eye at. But anyway, so like always, let me know if you have any specific questions. Happy to go over this in your local market. But there's your weekly update for this week and the first start of February. Hope you have a good rest of your week, guys.